Let's get into the energy markets now. Nat gas under some serious pressure today. WTI and Brent coming off their best week since mid-October. John Kilduff, again, Capital founding partner and a CNBC contributor, joins us now. Happy holidays. Welcome. It's good to see you.
Same here, Scott. Good to see you. Happy holidays.
Yep, thank you. 75. That's where WTI sits today. What's your outlook for the year ahead?
I think the year ahead is we'll scale some heights temporarily, but for the most part, there's big headwinds here in terms of the economic outlook. I mean, the reason that global central banks are cutting rates is not just because the inflation situation has potentially been tamed, but it's also because the economic outlook is softening. And that's going to speak right to crude oil demand, energy demand for the next year. And with the United States doing what it's doing in terms of record production, sky-high exports of both crude oil and refined products, OPEC Plus just can't cut enough, Scott, to sustain a price much above where we are right now, actually.
Does Iran remain the biggest wild card in how we need to think geopolitically, whether it's what's happening as we speak in the Suez or obviously the situation in Gaza?
It does. Iran is sort of the agita after the holiday meal for this market. They keep trying to make trouble, which they're effective at, but that's the limit of it. It's just some trouble. They are not going to be blocking the Strait of Hormuz anytime soon. They're going to be careful about who and what shipping assets they target. And to the extent they make trouble for the oil market in a bigger, broader way, they're going to have pressure, maybe not from the United States, where they won't listen to us, but they'll certainly listen to China, who will pay a dear price for any supply disruption events that were to be engineered by Iran. So, we're hardly alone in terms of, pounding the table and telling the regional actors to calm it down. And in terms of this these Red Sea issues that we're having in the Suez Canal, my money's on the Fifth Fleet here to keep those navigational waters open. So I think that's the smart money bet. And for all the fear and everything that gets stoked into this market from time to time, I think the reality is just that we're already seeing Maersk return to shipping. Hapag-Lloyd will probably announce the same thing tomorrow. So again, it's just the agita after the Christmas meal.
I don't know, though. It appears to be getting worse in some places, even if it's better on the shipping channels. These Iranian-backed groups are launching drone and other kinds of attacks against American troops in places like Iraq. President Biden ordering some airstrikes now against them. We've had this, the Iranian foreign ministry issuing a bigger threat to Israel, saying Tel Aviv needs to count down after one of its commanders was killed in Syria. It feels like it's moving in the other direction, John. So what needs to be factored in here as far as the energy equation if it does get worse?
I think the word is perspective. Everything you just mentioned is obviously troublesome, no doubt about it. But we have seen horrific, affronts to various countries over the years. The Houthis launched a rocket missile against the Saudi Arabia export facility Abqaiq back in 2019. Market didn't budge. There was that assassination of General Soleimani from Iran a couple of years ago as well. Nothing happened. So again, we will have these pinprick events. There may be some boost in the oil price like you're seeing today. Plus, it's a thinly traded market, so they're getting that advantage. But in terms of this thing escalating, at some point in time, the Iranians will cross a line that will get them put back in their box, or their agents, like the Houthis. I don't expect the Houthis to be able to run free throughout that region without consequence, just like you saw in northern Iraq over the weekend that you just referenced in terms of U.S. military strike. Same thing will happen here. The shipping lanes will be kept open, the oil will flow, and the bigger problem will return to being how the relative oversupply versus the demand projections that we all sort of argue over.